Dividend paying stocks are the type of stocks that will pay you to hold them after you buy them. It's kind of like getting a rental income after you buy real estate, except they're way easier to buy than real estate and you don't have to deal with the lousy tenants, mortgage brokers, property damages, lawyers, accountants, agents, brokers, and the overall stress. I mean, isn't that awesome? So today I'm going to share with you my top 5 favorite dividend paying stocks that I'm personally invested in, and I'm going to share with you my exact strategy on when to buy them, how long I'm going to hold them, and how much you can make by adding how many of their shares to your portfolio. I'm going to ask you a bunch of questions first so you can determine if this video is right for you to watch till the very end, because if it's not, then you shouldn't waste your time, right? Here we go. Do you want to take control of your financial future? Do you want to make your money work for you while you're asleep? Do you like free stuff? Do you like saving time? Are you going to smash that like button because it took me exactly 8 hours to research, analyze, film, edit, and publish this video to provide real value for you guys? Did you say yes to all of these questions? Congratulations! Because you're now qualified to continue to watch this video till the very end. Yay! Okay, I'm kind of kidding, and I'm kind of not. But are you ready to discover the top 5 best dividend stocks that will make you rich? We're gonna cue in the intro and let's go! Hey, Invest Divas and Divos, I'm Kiana Danial, a 4-time and a newly best-selling author and the founder of the Invest Diva movement, the march to jump on to take control of your financial future and to make your money work for you. My mission is to help 1 million moms start investing on their own by the year 2025. So if you are a mom, and or if you know of other moms who could benefit from taking control of their financial future, please spread the word and help us make this huge impact. The best place to start is learn.investdiva.com/yes. The link is down in the description area. Dividend stocks are shares of companies that pay out a regular earning back to the investors who buy their stocks. These earnings are called a dividend. So by investing in a dividend stock long term, not only you have a potential of increased capital gain, but you also get paid along the way just for holding that stock. Now you might be asking, Kiana, this sounds too good to be true. Why would a company pay me to buy and hold a stock? What's the catch? So here are some reasons well-established companies pay dividends to their shareholders. First off, they're actually kind of bribing you legally to hold on to their stock and not to sell them, because the more shareholders a company has, the higher their market cap. Now you might be saying, ew, I don't want to get bribes from no one. But there are other reasons too. For example, paying dividends also sends a signal to investors that a company is confident in their future growth, and it's a demonstration of financial strength. Now you might be asking, okay, why do massive companies like Amazon and Google don't pay a dividend then? They're obviously financially set for like another 100 years. Great catch. So with companies that are growing very rapidly and are really confident in their growth of their stock price, they're like, I don't need to pay a dividend. Everyone wants a piece of me whether I pay a dividend or not anyway. And investors might actually be better off just holding on to my stock shares for capital gains. They're gonna get way better returns, probably. And that's true too. So that's why I always say to my PIG members, Premium Investment Group members, don't worry, I don't go around calling people pigs for no reason, that they should be picking stocks that suit their risk tolerance, financial goals, and their time horizon to reaching those goals. For example, for my dad's portfolio, I invest a lot more heavily on dividend-paying stocks than on my own portfolio. He prefers to get a steady earning rather than wait for huge capital gains, especially when the markets are volatile. For me, I have a longer horizon to reach my long-term financial goals, so I mainly invest in rapidly growing tech stocks. But how about both? Wouldn't it be awesome if you could invest in stocks that both have huge capital gain potential and pay the highest dividend of them all? Luckily, I've got you covered for my top 5 in 2020 that I've shared with our PIG members. And yes, there is more and things can change. And that's why I monitor and share my investment strategies every single week on Tuesdays with our PIGs. So if you want to be an Diva PIG, who doesn't want? There is a link for you below this video to apply and get in. Number 5 on the list today is IBM. IBM is a very well-established company with a brand recognition in the tech industry at a 5.52% dividend yield in 2020, which means for every IBM stock you buy, you earn around $1.63 per quarter. This is actually very high dividend yield in the tech industry. IBM's stock price is currently around $120, and their next dividend payment is going to be around November 2020. So if you invest $1,200 to buy 10 shares of IBM before their next ex-dividend date, which is 2 business days before the date of the record, on which you must have become a shareholder to be entitled to receive a dividend, then you are gonna get paid $16 in November and every quarter after that. If you buy 100 shares of IBM, that's $163 per quarter, which is $6,520 of absolutely passive income in 10 years. Now, this may still not sound like a lot, but the reason why IBM is even on our list is because right now, IBM's stock price may actually be undervalued, and its price might even continue to drop before it exhibits new gains. Looking at IBM's chart, you'd notice that its price is in a downward channel, which indicates we could see its price to drop to as low as $102, maybe even $73. But because IBM has a very large market cap at $108 billion, in my opinion, it will likely rebound over time to reach its all-time high levels of $213 and beyond in a few years. So if you combine this capital gain with the dividend payment, you're looking at an $18,000 passive income, especially if you're not paying any commission fees to your broker, if you're using a commission-free broker like Robinhood or TD Ameritrade. I have links to these brokers, my favorite commission-free brokers, in the description area of this video. Now you might be saying, Kiana, if IBM is so good, then why is it listed at number 5 on your list? Great question, Kiana. IBM pay a very high dividend in the tech sector, but it has actually been pretty volatile compared to the rest of the dividend stocks on my list today. And the market sentiment is actually pretty neutral, so majority of investors aren't expecting exponential growth in its stock price in the near future. This brings us to number 4 dividend-paying stock on my list today, which is 3M, MMM. 3M is a white mode industrial company with $92 billion in market cap, which has a 3.67% dividend yield, which is around $1.47 dividend earnings per share per quarter. Yes, the dividend yield is a bit lower than IBM's, but the reason why this is number 4 is because the stock is way less volatile than IBM, and its potential for growth is actually way higher. So if you invest and reinvest your dividend payments back to 3M stocks, then you may end up with much higher capital gain in 10 years. Another point for 3M is that its stock price appears to be undervalued while the market sentiment is bullish and its stock price has already bottomed out. This means that 3M could see a recovery way faster than IBM, so you could even consider taking profit earlier and reinvest your profits in a different company that may be more suitable to your financial goals in a few years. But what could be even better than 3M? It's a healthcare stock called AbbVie. Also remember that I'm giving you a diversified top 5 dividend stocks. That means that if you choose to invest in all of them, you'll have a well-diversified portfolio across many sectors that could weather through all markets' ups and downs throughout the years. AbbVie has a $152 billion market cap, and its dividend yield is 5.49%. Based on its stock price today, that's around $1.18. That's again a bit lower than IBM and 3M. What the heck, Kiana? Why is it number 3 then? Well, because AbbVie again has a higher potential for capital gains than IBM and 3M. While it also pays a relatively high dividend payment, which makes it a very valuable stock to hold in your portfolio, especially if you're interested in getting exposed to healthcare industry. AbbVie's ex-dividend date is on October 14th, 2020. So if you purchase before that day, you'll be entitled to this quarter's dividend payment. From a price action point, I have set buy limit orders for AbbVie at 87, 81, and 77, and I'm planning to profit above $120 at key Fibonacci retracement levels of 141, 154, and 162. And I'm gonna give myself enough time for the stock price to reach there. Number 3 on the list is AT&T. Now, while its dividend yield is much higher than the previous stocks, you're gonna get way lower dividend payments right now because its stock price is, you guessed it, way undervalued. The dividend yield is simply the percentage of the amount of money companies pay divided by its current market price. So even though AT&T's dividend yield is 7.42%, since AT&T is currently only $27, you'll be getting around 50 cents per share. But that also means that if you invest $1,000 in this stock, you're going to get way more than what you would get if you invest in any other of our stocks so far. Now, one catch with AT&T is that it's not as good as a growth company compared to its competitor Verizon. Verizon pays a lower dividend yield at 4.23%, but historically its capital gains have been higher. On the other hand, Verizon's stock price isn't as undervalued as AT&T right now, so that's why there is a give and take here. One strategy you could consider is buying AT&T now and then adding Verizon later if its stock price drops. Looking at Verizon's chart, it looks like that it could start dropping towards $55 and beyond. Now you might be asking, Kiana, why do I need so many dividend paying stocks in my portfolio? If these are so good, why aren't they ranked higher on your list? That's an awesome observation, Kiana. So far, every dividend stock I've introduced have been paying their dividend payments on a quarterly basis. But you know what's better than getting paid on a quarterly basis? It's getting paid on a monthly basis, baby. That's why here at number 2, we have Realty Income Corporation at 4.78% dividend yield, which means you'll be getting paid 23 cents per share every single month. Now, let's compare this to actually owning a real estate and getting paid rental income every month. Of course, you could put less down to buy a house, go on mortgage and let your tenants pay for your mortgage, blah, blah, blah. But if you're like me and you do not feel like putting up with all the hassle there is that goes through real estate investment, or simply want to add on to your income stream, then is the right investment for you. So instead of putting, let's say, $20,000 on real estate, if you buy 333 shares of at $60 and hold it for 10 years, and let's say in 10 years its stock price only goes up to $100, you're gonna be looking at a $22,000 gain. That's literally doubling your money without doing literally anything the next 10 years. Instead of buying real estate all cash, let's say at $400,000, if you put all of that money in you're not only getting paid $1,333 per month, you're going to increase your net worth by $450,000 at the end of 10 years without having to deal with the lousy tenants and looking for new tenants if they choose to leave or not pay their rent because the economy is bad. Of course, there are no guarantees, but Realty Income itself is a real estate company that owns about 6,500 properties and then pays you a cut of their rental. So they'll be doing all the hard work and pay you simply by holding their stocks. This sounds awesome, right? But what's better than a 4% dividend yield in a real estate stock? 12% dividend yield. This spot is tied between two trusts, BXMT, which is Blackstone Mortgage Trust at 11.49% dividend yield, and STWD, which despite its stock symbol kind of sounding like STD, is not actually some sort of sexually transmitted disease, and it's in fact Starwood Property Trust at 12.91% dividend yield. Both of these stocks appear to be undervalued right now, and while it might take them a few years to recover, at least they will be paying you a generous handout every quarter to encourage you to continue to hold. And once we are out of a recession, you might even get a nice capital gain surprise in your portfolio, again, without doing anything the whole 10 years and literally letting the markets to do their thing. I'm invested in all of these stocks right now, more heavily in O, BXMT, and STW, and the combination is giving me a good balance with my tech industry investments that are focused mainly on capital gains. You guys, if at any point of this video you felt lost or thought I'm talking a different language, don't worry, I literally have an award-winning step-by-step power course that will teach you exactly how you can become your own money manager and select the exact right assets at the exact right amounts at the exact right time for your portfolio. And I tell you all about it in my Make Your Money Work For You free masterclass. So go ahead, open up a new browser and check out learn.investdiva.com/yes. I am looking forward to saying hi to you in the chat box. And in the meantime, please go ahead and share this video with as many of your friends who could benefit from dividend investing and taking control of their financial future. Who wouldn't, right? Smash the like button, subscribe, and select that bell notification button. You know the drill. All the good stuff that can help me with my YouTube algorithm. Thanks, bye!